Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York, Thursday, January 16th, 2016, and this is Trending Markets. We are looking at a Dow Jones Industrial Average, although well off of the highs of the day, still closing with triple-digit gains, currently up about 221, and it appears as though this is where we'll see some sort of settlement. As I said, markets set to close in about 3 to 4 minutes. Now, the high on the day was 16,482, so we're absolutely 100 points off the high, meaning that the Dow at its peak was up over 300 points on the day, but still a very, very respectable close, up almost 1.5% on the day. Same thing when we look at our Standard & Poor's. Standard & Poor's back above 1900, 1915, up 33 points on the day. Now the high was 1927. So we're just off of the highs when we consider that it's now trading at 14 or 15. So about 13 points off of the high. But look at this low, 1871. So we're about 30 plus points, 30, 40 plus points off of the low. So a tremendous swing in the day. Really what we want to do on today's daily report is attempt to make some sense of this and absolutely put out a conditional trade alert, because if we get follow through in tomorrow's activity in the Standard & Poor's and Dow Jones Industrial Average, we're probably going to want to initiate a long position. And we'll talk about that all on today's daily report. So we have certainly seen this market go through a pretty tumultuous climb or drop to the downside, I should say, as we witnessed it really come off of the most recent highs that we had. They're sitting up at around 2109 is where we're fixing that. And that, of course, was last year. Here's December right in here. 2016 really began with a whimper, absolutely not with a bang. As we saw the end of this year, we had a very, very short-lived kind of a Christmas rally, came up to these tops at around 2080. That happened right as the year came to a conclusion. We then broke through 50-day and 200-day moving average, and then we sold off, selling off retracement or potential support level after potential support level. First one we looked at was 2003, then 1937, then 1900. That's our 75% retracement level. We also talked about the fact that if we don't see a recovery or a move back above this particular price point, meaning the 75, 76 retracement area, that there's not very much of a case that can be made for a strong bull model in the market. Now, we have absolutely seen this market trade below that particular price point. Today's recovery, though, is absolutely significant in that A, we saw a tremendous upside move, and B, we have absolutely closed above 1900 at 1914, which is that critical retracement level. Because if we were going to continue down, as we talked about yesterday, we had two real levels that we had to look at. 1860, that of course being this low here, and then the bottom of the August meltdown, of course, comes in at around 1831. So those were the two real key levels that we wanted to look at. And it seems as though, at least for the moment, that the level of 76% retracement is going to hold, because we are back up 14 points above that particular price point. So traders, what is our conditional trade alert, and what levels should we watch for, and how can we react in tomorrow's trading session? First of all, very, very solid close. Now, I'm not so concerned with what happens in the futures market in the Standard & Poor's as it trades in the night session, because my sense is there's very, very thin trading, a lack of liquidity, which really gives you doesn't give you a great idea on many occasions as to where the market's going. So based upon tomorrow morning's open in New York, if we get any kind of a solid open and we start to trade in any way of a positive territory, of course, we talked about the last basic setup that we had. I wanted to see the market trade and close above 1937. However, at this point, I don't need to see nearly as much action. We need to see the market trade solidly. We need to see the market trade in positive territory, meaning that it goes above this particular price point in the marketplace, which is our current close at about 1916. If we get an open and it trades effectively above 1916 and goes into a solid rally, we want to enter the market at this point. And in terms of stops, we're going to have to look at initial points, but initially we're probably going to want to put it below 1900. So you'll enter at the market should we get a solid positive open in tomorrow morning's trading session. Any trades that are above 1920 to me is that solid territory I'm looking for. So if we maintain an open that is above 1920, go ahead, enter the market from the long side, placing your stop below 1900. And then, as I said, in terms of our entry point, about 1920. Anything above that, go ahead and enter the market from the long side. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Good trading to you. Bye-bye.